Hello everyone, welcome to the Ichimoku daily analysis for the Euro US dollar FX for Tuesday, June the 30th. Well, another indecisive candle as the markets tried to rally into this area of resistance. We can see that the rally that the market is currently in is on very, very weak candles. If we look at the configuration of the highs and the lows, we have a series of higher highs and higher lows. The previous day's trading didn't quite take out the lows, so we had an inside day in bar chart terms. But we still have a higher high and higher low, so we still have a first time frame uptrend. But if we look at the shadows here, we highlighted this area quite some time ago as an area of resistance and another area above it. And the market's tried to trade up into this area on 3-4 occasions now, and each time the market sold off. And we can see easily on candlestick charts that where the selling pressure is, and that's where we see the top of these of the wicks on top of the candle. So what happens is the market tries to rally there. The bulls try to push the market up, but the sellers come in and push the market back down. So we can see the long shadow on the current candle. Very small red body on the current candle, so not the sort of body that you want to see on a market rallying in the first time frame, but not a change of trend yet, and not a bearish candle either. Slightly bearish for the day, but the market didn't really close down towards the lows, so the sellers didn't show a lot of commitment for the market yesterday. Now, just looking at our other Ichimoku indicators, we're trading up above the cloud, which means that the market has a positive bias. So that's quite positive if you're looking to go long, although remember we have this very strong area of resistance up here. So anyone thinking of going long based on daily charts will be trading into trouble, I think. Looking at our other indicators, we have the Tenkan Sen trading below the Kijun Sen. The Tenkan Sen is the line that represents the faster moving trend. The Kijun Sen represents a slower moving trend. And in a similar way to moving averages, if the Tenkan Sen is below the Kijun Sen, it gives us some sort of a bearish indication, which means that we're getting conflicting signals with our Ichimoku indicators. It's not really telling us what's happening with the trend here. And it certainly doesn't mean that we want to go long. We certainly probably should be wary of going short at the moment as well. Now, we're trading just at the Kijun Sen as well, just slightly above it, but pretty much at it, only 10 pips away from or below the Kijun Sen. So no real direction there in the longer time frame. And the Kijun Sen is pointing sideways too. Now, we know that when the Kijun Sen points sideways, it can quite often be an attractor of price action, and that's what's happened here. The market is trading around the Kijun Sen now, which means that the market is in equilibrium. And we know from previous videos that I've said that the market moves from equilibrium to disequilibrium. We can see here the market's in equilibrium when it's trading around the Kijun Sen, moves to disequilibrium, and it'll come back. Here, we've had a very fast-moving market, and equilibrium was represented by the Tenkan Sen here. Here again, disequilibrium, equilibrium, disequilibrium, and back to equilibrium here. Disequilibrium, equilibrium. And now we're trading in equilibrium. Now, what happens with markets is that when they're trading at equilibrium for a period of time, they'll move away, and the markets will constantly move between equilibrium and disequilibrium. So because we've been trading around the Kijun Sen for quite some time, we would expect that we might get some sort of a move soon. Now, you'd have to say the probability is that it won't be to the upside because we have this very, very strong area of resistance. Could trade up there, but probability is against it. It's most likely that the market will trade to the downside. If it does trade to the downside, there's a lot of support through here. We can see that we've had buying coming in here, in this region here around 138, around here around 137.5, and then we have the area of the cloud or the Kumo which will act as an area of support if the market trades down through here. So we should expect this market will trade within quite a large range over a decent period of time. So we have an upper boundary for the market. We've got these two well-defined areas of resistance, and we have lower boundaries for the market, defined by these minor swing lows and then the cloud or the Kumo. So if you're looking at taking longer term view to the market, really we shouldn't expect any major trending action for a period of time.